Good morning and welcome to this Tuesday, October 22nd, 2019 edition of Trading Places Live on StockCharts TV. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and I'll be your host of Trading Places Live, featuring everything you need to know as you prepare for the trading day ahead. Well, we've got a lot on tap for today. We're going to try to get through a number of different areas. We'll go through yesterday's daily market recap. I want to give you one fact on seasonality you may not be aware of, but today starts a pretty big day, especially if you're bearish the market. We'll get into earnings spotlight. Of course, things are really beginning to pick up with earnings, so we have lots to go over there. Upgrades, downgrades. I'll show you how you can refine a scan, in particular a predefined scan, just by clicking on one little line that you might not be aware of, and then just adding a little information. And you can customize your own scan starting with the predefined. We'll talk about a couple of groups that are beginning to show new leadership in the market. I think this is important as we go throughout the fourth quarter of 2019 and into 2020. And then we'll wrap up the show as we always do with three you must see. These are three stocks showing something on the charts that look interesting. It doesn't have to be individual stocks. Sometimes I'll look at industry groups. Could be sectors, could be a major index, but we'll wrap it up with three you must see. So let's start with the recap from yesterday. It was overall pretty decent day, especially if you are a technology fan. NASDAQ did very well. But let's pull it up here and take a look. So you got the Dow Jones Industrial Average here up 57 points yesterday. The S&P 500 was up 20. The NASDAQ up 73, so up almost 1%. Russell 2000 also showing that relative strength, moving up almost 0.9%. 10-year Treasury yield, this is today's action you can see right here because it's already opened. The 10-year Treasury yield down 2 percentage points, or 2 basis points. But yesterday had a pretty strong day, was up 5 basis points. And that was one of the reasons that the market was able to rally and that we were able to see the S&P 500 move back up above 3,000. We had rotation yesterday away from Treasuries, sending the yield higher, and then that money rotating into equities. Today, so far, we've got that yield moving back down about 2 basis points. There was no economic news out earlier. In fact, the only report of real significance that we have is existing home sales, which comes out in about an hour. As far as the sectors go, energy had a pretty strong day yesterday, even though crude oil prices really didn't do much. Energy did jump, couldn't get through the major overhead averages, 20-day and 50-day, also could not clear prior highs. But hey, up is up. Energy's been a rough sector for quite a while, so it was good to at least see that group on the positive side of the ledger. Financials had a big move yesterday, and you can see challenging some fairly significant overhead resistance near that 2850, 2860 level. We closed right on 2850. Part of that, if you study history of the market, you know that financials tend to do well when we see a rising Treasury yield, 10-year Treasury yield, and especially when that yield spread between the 10-year and the 2-year widen. Yesterday, you can see, or actually really throughout much of October, we have been moving higher on the 10-year Treasury yield, and that is what is enabling financials to go up and challenge this overhead resistance. Banks, big breakout yesterday. We've had multiple tests in the mid-460s. We have not been able to close above it. We'll look at this group a little bit later in the show, but you can see that breakout yesterday. So leadership coming from banks, that is good news. Technology also had a pretty good day yesterday, up more than 1%, rebounding after it had gone down on Monday, down a little bit below, or Friday. Yeah, it was Friday. We went down a little bit below that 20-day moving average. We hit gap support and we bounced off of it, holding both. And then yesterday we rebounded. So very good action in technology. Leading technology yesterday, semiconductors. Semiconductors not quite doing what the banks are doing. Banks made the breakout above the July and September high. Here are the July and September highs for the semiconductors. We're close. Move much above 3850. We actually have some longer term resistance we need to watch closer to 3900. But this is an area that we're climbing into on the semiconductors we really want to pay some close attention to. All right, as far as some news out today, one big piece of news, Biogen is absolutely soaring in pre-market. It is up, last time I looked, about 36%. The stock, you can see, has not really been doing much, just languishing. If we pull it up on a relative chart, you'll see that Biogen, after the huge gap down back in March, has just been going sideways. Biotechs had not been doing much. Well, biotechs are starting to make a push now, and we closed yesterday right at about a 4-month, well, little over 3-month high on the biotech group. This is certainly going to help. Biogen seeking approval for an Alzheimer's drug, absolutely soaring in pre-market action today. I think the last time I looked, it was up, 80 points. I can get you that number here. But I think that is certainly going to help the overall biotech group today make that breakout. So this is a group maybe we might want to start taking a look at now with the Biogen news. Let's see here. I'm trying to get that quote for you. There it is. Yeah, it's up $82 right now to $306. Yesterday's close, $223. So this is up 37% this morning. So we're looking at an open. If it opens where it is right now, 306, we would be all the way back up here. Not quite to that gap resistance at 320, but certainly making our way up through most of it, getting close. So maybe watch that 320 level, but Biogen certainly going to have a big day today. All right, let's move on. I want to get into the earnings. We have so many companies beginning to report. So I'm going to start off with a couple that reported, well, a few that reported yesterday after the bell. First is Ameritrade. Ameritrade actually came in with record results. They beat on the bottom line, $1.05 versus 97 cents. They were up about 1% pre-market action. So this is going to be an interesting day for the stock because based on where it is gapping up to, it's probably going to be up close to that 20-day moving average at the open. And in a downtrending stock, that can be trouble. So I think that we're getting a little bit of a nice move to the upside with its earnings report, but I'm going to question whether or not it sticks. That will be a big test for Ameritrade today. CDNS, this is Cadence Design Systems. They did, I think they matched revenue estimates, but they beat on the bottom line, 54 cents versus 51 cents. Stock is up 5% in pre-market, so it is going to clear this downtrend. I was actually looking for a push back to the upside on Cadence Design, and I think we're going to get that catalyst with its earnings. CE, this is Celanese. They came out with their numbers, 253 versus 250 on the bottom line. By the way, I've got 22 stocks here that I was kind of following. 18 of them beat their bottom line. 3 missed and 1 matched, and we'll talk about the 3 that missed here in just a second. But Celanese did beat on the bottom line. I didn't see any pre-market action going on with that stock, but you can see that it is kind of mired in this sideways consolidation after the huge move it made into the beginning of September. I'd be looking for maybe 115 up to about 127 as your current trading range. Let's talk about one of the stocks that missed earnings, McDonald's, and this was this morning. McDonald's coming out with earnings that came in at $2.11. The market was expecting $2.20. So pretty good miss there by McDonald's. Let's see where this one is currently. I know it was down pre-market. It is currently down $6.13 to $203.72. So it is going to gap down below these prior lows. If you're in the stock or if you're bullish McDonald's, you really want to see a hollow candle print and some sort of an exhaustive gap here to the downside and then begin to push back to the upside. Looking at it from a longer term perspective, McDonald's has been in a beautiful uptrend, been holding this 20-week moving average right close to this 210 level. Seems like we might be going down maybe to test that 50-week moving average, which is a little below 200. All right. Next up, another miss. I'll tell you what, I did a Q3 earnings webinar yesterday for earningsbeats.com members, and this was one of the stocks I did not like at all going into its earnings, and it came up with a huge miss. Travelers, I'm going to pull this up on a relative chart and show you what I was looking at. But you can see Travelers, number one, had topped back in July, printed a low, came back up, put in a lower high, came all the way back down on increasing volume, took out the prior lows. It's just been downtrending. Not only has it been downtrending on an absolute basis, but look at the relative strength here on Travelers versus its insurance peers. For the last 4 months, it has been straight down. Travelers was trading at a 52-week relative low to its peers, and not too far from a 52-week relative low to the S&P 500. And all of this comes in a period where the overall group had moved higher back in the spring and has simply been going along for the ride with the S&P 500. This has not been a bad group, and yet Travelers has been wildly underperforming the group. That is never a good sign, and we're getting the news today. The stock was down about 4.5% on the news. I'm going to give you an update on that quote. Pre-market right now, it's down 3.46%, down $4.91, trading at 137. So you can see you're getting a gap down here. Like McDonald's, you really want to see a reversal if you own the stock. I'm not a fan. I believe the stock is going to continue to go lower. There's a reason why it's at a 52-week relative low to its peers. We're finding out a little bit of it with its earnings report. The earnings, by the way, were atrocious. I mean, based on the earnings, and I'm assuming this is comparable, I got it from Zacks, $1.43 versus $2.38. So that isn't a slight miss. That is really missing the whole side of the barn with that earnings report. So TRV going to be under pressure at the open. We'll see what happens after the open, how the market reacts. I would suspect we go lower. Let's see. There were a couple of good reports that came out. One was Procter & Gamble. This is PG. This is another one that I really felt strongly about that was going to go higher with its earnings this morning. And the reason being, and I even explained this a little bit in the webinar yesterday, you look at the absolute chart, you see it break down below the 50. You get that death cross, the 20 below the 50. And this doesn't really make you feel very good about Procter & Gamble. But you have to understand that the overall group had been selling off in October, which was, kind of leading Procter & Gamble to the downside. But look at the relative strength on Procter & Gamble versus its peers. It's been in an uptrend for several months. And while the group's been going down in October, this one actually has held its own and has started to rebound against its peers. So it's not going down by as much as its peers. The other thing is, for the most part, the selling that was taking place was on pretty light volume. I think when we broke below the 50, probably got a few panic sellers in there. But overall, the volume had not been that strong. I did not see institutional distribution taking place here. So I felt pretty good about Procter & Gamble going into this earnings report. They came in $1.37 versus $1.24. So a really nice report there, getting rewarded, up currently 4%. Well, it was up 4% again. Let me give you the latest there. 4.47%. It's up $5.32 to $124.40. And the highest close or open that the stock has seen was $123.78. So right now at $124.40, we're going to get a breakout on the open. I'd love to see the gap ups clear prior resistance. So anything above 124 on the open today, I think would be very bullish for Procter & Gamble. I expect it to go higher. All right, let me see if there were any others of significance. Like I said, there was a lot of stocks that I took a look at this morning. Lockheed Martin actually came out with a really nice bottom line beat, 566 versus 503. So it wasn't close, but apparently it wasn't good enough. Right now, I'm showing Lockheed Martin down a couple percent in pre-market. Pull that one up, get you the latest. It's down $10, 2.69%. So it is currently trading at 363. I think what I would be watching for is the double bottom here. Lockheed Martin had printed a bottom back in July, tested it again in August, down close to the 350 level. We're at 363 in pre-market. I think maybe we go down to that level. I wouldn't think we'd go any lower than that. I still like the overall group, even though defense stocks have had a rough couple of weeks here. I still believe we are overall in an uptrend on a relative basis, and I think they will regain their leadership. Certainly doesn't add a whole lot of confidence, though, when the stock beats on the bottom line like Lockheed did and still goes down. So I do want to watch to see how the reaction is. We've got other defense stocks coming up with earnings later this week as well. All right, I'm going to move on. So let's go into the upgrades and downgrades. Got a number of these for you today. Anaplan, this is a software company. was upgraded today. Just broke down below these prior lows. The volume had been pretty strong on the way down. I'm going to be interested to see whether or not it can hold any potential gain at the open on the upgrade. They are up 3.56% pre-market, up $1.58 to 45.91. But that is still quite a bit below the 20-day moving average, which is 47.44. And it's also below the gap resistance from October 16th when we gapped down to 46.46. So there's some overhead resistance on Anaplan. So even though we're getting the upgrade and it feels good on the open, got some more work to do. And this has been a tough area of the market. A lot of these software stocks that had been leading the market for whatever reason seem to be getting repriced quite a bit lower. All right, next up on the upgrades, let's take a look at DBX, which is Dropbox. All right, DBX is currently in pre-market action, up 3.86%, up 73 cents to 19.65. That would clear their moving averages. It would also clear the recent reaction high up near 19.50. What the stock does after the gap up will be pretty important because it could be trying to change the direction of this downtrend. I don't think today's open will do it, but maybe continuing strength would be a good thing here, something to keep an eye on. Juniper also upgraded, and Juniper currently up 1% pre-market today, 24.51. Still in this overall downtrend. When we look at the relative strength, Juniper's got quite a bit of work to do here. I don't know. I don't see enough yet to get excited. Next upgrade is Owens Corning. And I tell you, I believe this is a stock that I really liked. Yeah, this one heading into earnings. Look at all the volume coming in September on this push to the upside. Almost no volume on this move back to the downside. Now it's coming back up. Look at the relative strength. Owens Corning now is just about at a 8-month relative high versus its peers. And look at it breaking out to a new 52-week relative high versus the S&P 500. It's upgraded. I'm not seeing any action so far in pre-market, but I would expect that this stock on any pullback to test that rising 20-day moving average. It's something I certainly would be considering. Last one, and this is a stock that has absolutely been beaten up badly. It is in that cloud space. Workday, getting an upgrade. Ooh, I don't know the way. Let's see how this one goes after it opens. It's up $3.21 right now to 157.30, which is up 2%. That is nothing compared to where this stock was just about a week ago when it was up in the mid 180s. Came all the way down to 154, gets an upgrade, it's up $3. This stock has got a lot of overhead resistance to deal with. The relative weakness now is quite apparent. Volume trends are horrible. There is your breakdown. There is your gap resistance right here. And there's your 20-day. 165 to about 168, 169. That range, in my opinion, going to be very difficult to get through for Workday. So I don't know. I'd be a little careful here. Let's see. I'm not going to go over charts on the downgrades, but I will give them to you. Had a number of downgrades. I get them at briefing.com, by the way. But Electronic Arts, Intuit, SolarWinds, and Textron all were downgraded today. And now I wanted to go into refining a scan. So what I did is I pulled up the predefined scans here, and I looked at the 52-week highs, and I said, okay, here are 247 New York Stock Exchange highs. That's a lot of stocks on the New York Stock Exchange. Go take a look at. And I mean, trying to pull up all these charts, that could get a little hairy. So normally when I see a 52-week high, one of the big things I want to know is a stock breaking out, and is it confirming on better than average volume? Well, up here, you see this little click here to edit the scan button. This is pretty useful because now I can click here and it brings up basically all the language you need for this particular scan, which is a 52-week high scan on the New York Stock Exchange. So you click on this and you will see it's stocks, New York Stock Exchange, simple moving average volume has to be over 40,000. Of course, the daily high is greater than yesterday's daily max 253. So that's telling us that it's a 253 trading day or a 1-year high, 52-week high. But now I want to add something. I want the volume. There's nothing in here other than saying that the volume, the daily volume, that day's volume has to be more than 40,000. That's all that's in here. 20-day moving average, 40,000. That's not much. So I really want to make sure that the volume yesterday is way above the normal volume. So one scan that I already have that you can see over here, this is just a volume scan, and you can see the language right here. So all I have to do is just take this, and I'm going to copy it. Actually, I want that and as well. So let's go ahead and copy all of this, and I'm going to go back over to this predefined scan, and I'm just going to add it. Now I'm adding, and I want more than just 40% of normal volume. I want maybe let's do 1.5 times normal volume. I am going to check syntax just to make sure everything's okay. It is correct. And now I'm going to run that same scan, New York Stock Exchange 52-week highs, but now I'm adding, it's got to be, the volume has to be at least 1.5 times its normal volume over the last 90 days. All right. So let's go ahead and run that. Now, instead of 200 and some stocks, now I have 24. And I know all of these stocks are much higher, have much higher volume than the others. So one stock that I really like is Kansas City Southern. I've talked about that before, so I'm not going to bring that one up. But let's look at Keysight Technologies. Look at this stock. This is a stock that I really liked when it pulled back. I think this may have been one of the, looking back, I think this might have been one of the 3 you must see charts when it was getting back down into this support area. But anyway, it's rebounded. I know this is a stock that I have featured on the daily market report over at earningsbeats.com, a report I write every day. But look at that move to the upside yesterday. Look, the volume coming in. Nice breakout on Keysight Technologies. And that was easy to spot because of going back and just simply changing my scan and just adding that volume requirement. Now going from 227 or whatever it was down to just 24. I could quickly go through, find stocks that might interest me. Technology stocks are going to interest me. Badge meter here is actually a stock I'll be showing you in a minute, so I'm not going to pull that one up just yet. But yeah, I mean, there are stocks on this list. Look at the Home Builders ETF down here, breaking out to a new 52-week high. So it can just give you quickly areas of leadership. You can even sort these by sectors, industry groups, whatever you want to do to try to find areas of the market that are really showing strength. All right, next up, new leadership. And I mentioned earlier, and I kind of skipped over it, and I apologize for that, but I did have some information for you that I wanted to share on the upcoming week in the market. So it's a seasonality thing, and I skipped right over it. I apologize to Zach, who probably threw him for a loop, not being able to bring up that slide. But this particular week, the October 22nd to October 27th on the close, that is 6 days. It's actually 4 days this week, Tuesday through Friday. But those 6 days, calendar days, the annualized return since 1950 is minus 43.94%. I would say it is arguably the worst week of the year. That's starting today for the rest of this week. Now, I love the market technically. I don't like it historically. I usually will prefer go with technicals. So I'm aware of what's going on, but I just want to let you know that it could be a problem. All right, a couple of areas that I wanted to just point out where we're beginning to see some leadership. The first one here is the bank index, Dow Jones U.S. banks. You can see all of these tops, 460, 465, maybe 468, 467. The last week or so, 466, 467. Finally, yesterday, we make the break, 472.62. No guarantee it's going to go higher, but what this is beginning to tell me now is that we have an uptrend in play. If it reverses, I would be looking for that rising 20-day moving average to provide great support. So this is something I would look for maybe to get into individual bank stocks. Any kind of a pullback, to test that rising 20-day, I believe would be a great entry. All right, let's see. The other one I wanted to mention was the durable household products. I kept talking about getting through this 240 area right here. We struggled for a year. Well, look, we are now through, and we are continuing to make this push to the upside. PPO looks great. Very similar to banks. I think that rising 20-day moving average could be great entry into stocks within this group if we get a pullback. So that's something to maybe keep in mind. All right, I'm going to move on, and we're going to wrap up this show with 3 you must see. I'm going to start off with my third chart that you must see, the number 3 candidate here, and that is ROST Stores. ROST Stores went up, made the breakout on slightly expanding volume, did break out above this double, maybe even triple top here around 110, 110.5, got up to 115. We pulled back yesterday, and I love that candle right there. Talk about getting corroborating evidence. Whenever you're looking at a potential trade, it's the more reasons to buy, the better off you are. In this case, ROST Stores has a trend line support that it hit yesterday. It managed to go below its 20-day moving average and come back up and hold it, which is awesome. It has a breakout where it's coming back down, testing price support. So there are all kinds of different reasons that you could be interested in ROST. And another reason, and something to watch, retail or the apparel retailers here, this 975 area was a high back in April. We just tested it again. Watch that, because if we break out, this is going to be like banks. It's going to be like the durable household products. Nice push up to the upside could be very bullish for ROST Stores, because it is one of the leaders, as you can see on the relative charts down here. All right, next one, Badger Meter. Told you we were going to talk about this one. Well, this one, I really like the stock, and it's in a good area that is trying to make a breakout. It's within technology, great volume trends. Everything looks really good, but I don't like reversing candles at resistance, and that is a dark cloud cover. We had a breakout intraday, reversed. I think we're going to pull back on BMI, but I think if we get back down into this support zone, or better yet, down to the 20-day moving average, I'm going to say about 54.5 to 56. I think that would be a really nice entry into Badger Meter. And then my final stock today is going to be LCI Industries. This is in the recreational products group. Didn't talk about this group, but check this breakout out. Moving above the May high. This stock has been consolidating relative to its recreational products peers. It is breaking out versus the S&P. And watch recreational products, because we got up to and almost broke out to about an 11-month, 10.5-month relative high. A break above that would be very bullish and would certainly aid a stock like LCII. All right. Well, futures are fairly flat today, although the NASDAQ is going to get a boost from Biogen and maybe a couple others. So I want to wish everybody a great day. I want to thank you so much for joining me today. Remember to tune in to Trading Places Live here on StockCharts TV every Tuesday and Thursday from 9 to 9:30 a.m. Eastern. I also conduct a similar Trading Places Live show on Mondays and Wednesdays, also from 9 to 9:30 a.m. at earningsbeats.com, so you can check that out. And always be sure to check out my blog, Trading Places. Have a great day, everybody, and I'll see you back here on StockCharts TV on Thursday. Happy trading.
Today's market volatility provides savvy traders and active investors with an abundance of profitable opportunities. At the Traders Expo Las Vegas, November 7th through 9th, over 75 of the most respected traders in the world, including Dennis Gartman, Tom Sosnoff, Todd Gordon, and Tom DeMark, will explain how they're adapting their strategies and share the specific trading opportunities they've identified in equities, options, forex, futures, cryptocurrencies, and more. Claim your free pass to join them at tradersexpo.com.